Yeah, Russia's central bank raises the key rate to 7%. They're saying they've done this to prevent inflation risks. Of course, when you've got rubles hitting record low, that means you're going to import more inflation. They say it also to ensure financial stability. Of course, this is a little bit of a surprise, although not completely, because at some point the central bank's going to act when the ruble hits record lows.
Especially when inflation is above its target range as well. Meanwhile, stocks are falling, aren't they, John?
They are, by over 7%. You see a bit of a turnaround in the Russian currency, but certainly not in Russian equities, down by over 7%. The Russian central bank are going to meet again on rates on March 14th, so we could have more action there. Reminiscent a bit of Turkey, the way Turkey moved out of the blue, set a surprise meeting, put up rates. Russian central bank has moved, helping the ruble to some extent, though no respite for Russian equities right now.
As Kit Jukes was saying to us, it was just at a time when emerging markets generally are trying to redefine themselves for 2014, aren't they? You mentioned the Turkey example. There are many others, of course, of central banks that have had to put up interest rates to defend currencies or to cope with whatever other market turmoil is being thrown at them.
And not good for growth, you've got to say. You've got broad-based tightening across many of these emerging markets with central banks putting up rates. Now, it's going to help the inflation side of things, but it's certainly not going to help the growth side of things.
And it hasn't done too much to the Argentine peso, still the worst performing currency against the dollar. We're talking emerging markets here, down 17%, and ruble is the second worst still year-to-date, down by 9% against the dollar.
It's taken a beating.
It has.
Not
John?
the Ukrainian currency.
Yeah,
it's not the worst performing,
exactly.
which might stand out as a surprise to some. John, thank you very much.